Hi, Steph from Milford here. Everyone on TikTok is talking about the stock market fall. Here's what we have to say about it. The S&P 500 was down 3% on Monday, its biggest pullback since September 2022, now down 8.5% from its peak. And yesterday, Japan had its worst one-day drop since 1987, down 12.4%, bringing the total fall from its peak to about 25%. And basically, it's a huge positioning unwind. Everyone got too excited, momentum was strong, valuations didn't matter, and that's now blown up. So there were three reasons for the big sell-off. First, there are concerns about US growth, which was made worse by a weaker than expected jobs report late last week. To us, it looks like the US economy is still on reasonably solid ground. There was a lot of noise and technical factors impacting that jobs number. We don't think it was anything to worry about. Second, enthusiasm and hype around AI has been incredibly strong over the last few years, but there are now concerns that these tech companies are investing too much without a huge amount of AI revenue to show for it. And lastly, the Bank of Japan raised interest rates last week, which was its first rate hike in 17 years. This caused an unwind of the yen carry trade. Effectively, investors had borrowed in yen to invest in global assets. The move higher in Japanese interest rates, investors needed to reduce some of their Japanese debt, so they had to sell down some of those global assets, like US tech stocks. Ultimately, we believe economic growth is slowing, but not falling off a cliff. And with everyone on the same trade, there was bound to be a reversal at some point. This is a natural and healthy part of the market cycle. It's hard to know whether the sell down continues or whether investors start to buy the dip, but as active investors, market dislocations like these provide exciting opportunities for us.